Breaking news coming up on your screen. The inflation has now fallen below 4%, the benchmark of Reserve Bank of India's Monetary Policy Committee target. We have with us Indranil Pan to discuss about it. Mr. Pan, now the inflation is below 4%. What do you think Reserve Bank of India will take you in the next policy?
It was anyways coming down, and I think the RBI anyways has started the cutting cycle in the previous policy. So after they had started to cut the repo rate, we were anyways confident about the fact that they will continue into the April policy with one more cut of 25 basis points, followed up by another 25 basis points in the June policy. So that was not really the question that I think the markets were seeking for. The issue was whether the RBI would be willing to and able to change the stance from neutral to accommodative, which I believe they might not be willing to do immediately in the next policy, even though inflation has fallen below the 4% mark. Now, some of the reasons why I think the stance may not change is there is a significant amount of uncertainty that is happening globally in terms of the tariff structures. We really don't know what is the type of strain that comes through in terms of the supply chains and therefore the impact of it on the input prices. Domestic liquidity continues to be on the tighter side, and you cannot rule out further FX interventions that might lead to sort of tightness of the liquidity continuing for a few months. And last but not the least, there are some weather warnings in terms of the summers being a harsh summer. So once again, we need to factor the impact of that on typical elements which have shocked us earlier, which includes the tomatoes and the vegetables. So what is the intensity of the vegetable shock in this summer month will be another thing that is on the radar. So given all these risks for inflation, I do not expect the Reserve Bank of India to change the stance while they will continue with the rate cutting cycle.
But if you see a few of the constituents of inflation this time, food inflation is at 3.75%. I'll repeat once again, 3.75% food inflation, which has been a major concern in the recent month for Reserve Bank of India. Mr. Pan, how do you read this particular number?
Well, I think the reason why we and the market was expecting a softer inflation print was because the food prices going down. Our estimates in terms of inflation was relatively higher than what we have got at 3.61%, and our food inflation estimates were on the higher side. And with food actually crumbling to the extent that you have highlighted, I think we are now seeing some turn around in the core inflation, which is something that one needs to also factor in. So yes, the comfort comes from food, no doubt about it. The comfort definitely does not come from non-food, and given the comfort from food, one may be slightly more confident of the consumption pattern going forward, given the fact that higher food inflation in India, given that there is a significant sort of bias in terms of the overall budgets of the Indian population more skewed towards food, at least for a certain significant section of the population. There can be some benefits of lower food prices on discretionary consumption items. And therefore, we might actually see core inflation not falling in the medium term. It will be mostly sort of the food that will determine the course of inflation going forward.
Talk about the core inflation, it has come in at 4%, which seems highest in 1.5 year. Mr. Pan, is this a concern?
No, I wouldn't say this is a concern. This is definitely not a concern, and I think if I really look at the the non-food structure, We had anyways, as I said, expected it to tick higher because of the base effect from the previous year weaning out. On a month-on-month basis, there is not much of a significant sort of uptick in the food prices, non-food prices. Now, non-food prices also includes the gold prices, and if gold prices have been on the higher side, along with depreciation pressure from the currency, that is also likely to lead some upward bias in terms of the core inflation and may not be directly linked to the consumption bias in the economy. The point that remains important, therefore, is if the core is on the higher side, and if inflation surprises higher in the summer months due to, once again, a challenge coming out of vegetables, what happens to the headline inflation at that point in time? So that, I think, is the risk that anyways is there.
Let's also welcome Saugata Bhattacharya and Gaura Sen Gupta to the show. My first question to you will be, Saugata, now inflation coming below 4%, food inflation also falling at 3.75%. Is it music to the ears of the policymakers?
Yeah, thank you very much for having me on your show. I'm not very sure whether it's music to the ears or not, but I mean, it's a nice outcome, nice print. So what this definitely seems to mean is that the inflation forecast for Q4 at the last MPC meeting, the actual inflation is likely to overshoot fairly significantly, I would say, by 20-30 basis points. The RBI 4.4 Q4 FY25 inflation, and there seems to be, I mean, given the level of prices, the index actually coming down below where we thought it would be referenced, would also probably lead to some easing of pressures, inflationary pressures going ahead into FY26. So core inflation, I mean, it's on expected lines. It's a little higher than what I would have imagined it to be. But Indranil just mentioned this, that one part is the base effect, and the other part probably is contributed by rising gold prices, by gold prices having risen in February. So that must have impacted the core inflation part. Hopefully core inflation, because given oil prices, pressures coming down, commodities prices not flaring up, etc., metals prices, core inflation will probably also, hopefully, also remain in check. So the inflation path seems to be looking much better than a few months back.
I want to understand with you the numbers flashing on your screen on IIP. Now, on one hand, MPC's target is below 4% CPI. IIP this month has come in at 5%. The January industrial production has risen to 5% versus estimate of 3.5%. Electricity production has risen to 2.4%. Capital goods production is 7.8%, and infra goods has risen to 7%. What is your take from these numbers? Gaura, I want to ask you this question on IIP.
All right. Okay, sure. Thank you so much. So basically, the IIP numbers should be always seen in conjunction with other indicators. The reason being that IIP tends to be very volatile. The base of IIP has also not been revised for a long time, so it's a bit outdated. So it must be seen in conjunction with other indicators. But the pickup in momentum is a good sign. We are seeing, if you look at other indicators, a clear pickup in rural demand, which is got supported by the fact that the Rabi as well as Kharif crop output this year is going to be stronger. The urban side, at least in our assessment, at least in the month Q3, Q4, there is a pickup, but it's not as strong as rural side. And in terms of industrial activity, IIP is showing some pickup, but other indicators did show some softness. For example, you had the PMI manufacturing, which came a bit softer. Electricity demand has moderated a bit. But again, it's been a little bit mixed on the industrial activity. But overall, if you take into account all growth indicators, there is a pickup in rural demand, as well as some improvement even on infrastructure. This is because government, both center as well as state government, their capital expenditure is actually picked up. But for the overall, in terms of growth implications, we still see FY25 GDP at around 6.3%, which is slightly softer than the advance estimate. Our Q4 GDP is still tracking at around 6.8, 6.9 versus the advance estimate, which would have implied a 7.6% growth for Q4 FY25.
Swagata, I want to come to you for how will MPC will deliberate now. You are the one person who will be deliberating these things. But if I were to understand you, how does MPC sees these numbers? Because we have seen what has come in the minutes of the last meeting. There was a deliberation on inflation. It is still not out of the park. The elephant is still there. How do you assess the numbers now?
So again, I'm not going to speak for the MPC. Each member have their own minds. I'm not going to. I'm just talking on from my perspective. So obviously, growth is recovering. I totally agree with Gaurav that the FY25 numbers are likely to be lower than the initial estimate, the NSO estimate, from whatever nowcast numbers, the high frequency indicators, etc. So given this, I'm not going to predict the next rate move, but certainly it seems that the inflation path that we are seeing and we are likely to see for the next few months, despite all the risks on the horizon. I mean, imported inflation, a warm summer, hot summer, etc. So all these issues coming in. I think the inflation path probably opens up more space for additional easing. And given the fact that we are still below 6.5% growth, I think that also opens up, which is probably close to the potential output that we have now. So I think the economy can absorb some more stimulus without the risk of overheating with inflation again beginning to pick up. So I think the growth inflation trajectory trade-off at this point in time looks favorable for further easing. When and how that happens, I have no idea. We'll have to be data dependent and move forward from there.
Is there a scope of further revision in GDP and CPI forecast, which happened in the last policy?
So I think GDP numbers probably for this year. This year's numbers are taken from the NSO. I mean, that's not a forecast. We take the NSO forecast. Next year, it's too early to tell. But given the fact that, given all the disruptions, etc., I mean, looming slowdown in global growth, all the uncertainties that are now happening, investments, foreign flows, etc. It's also likely that next year's FY26, the GDP growth path will probably be towards the lower end of the chief economic advisor's growth range of 6.3 to 6.8%. But I think it's too early now to comment on FY26 growth. We'll see how the growth numbers, activity numbers begin to move going forward.
To paucity of time, we will conclude the discussion for now. But thank you so much, all of you, for joining at this hour. And the cue is clear on the statistical terms. Inflation, which has come below 4%, and IIP is at 5% now. Now it is all over to Reserve Bank of India for the next policy meeting, which is due next month. Thank you for watching this special edition of News Now. Please continue to tune in to ET Now for further updates.